Good morning, everybody. It's Thursday, April 24th. It's 5:24 a.m. Central Time. Grain markets are mixed this morning. July corn futures up 2 cents at 481 and a quarter. July soybeans up 6.5 at 1056 and three quarters. July Chicago wheat down 3/4 of a cent at 542 and three quarters. July Kansas City wheat down 3 at 547 and a quarter. That contract made fresh life of contract lows overnight. July spring wheat down 1.5 at 605.5. Let's start off with yesterday's price action.
Soybean futures rose yesterday, driven by optimism over easing U.S.-China trade tensions. The July 25 contract gained roughly 4 cents to settle near 10.50 per bushel, its highest level in 2 months. The rally was partially fueled by President Trump announcing earlier this week that he has no intention of firing Federal Reserve Chair Jerome Powell. He also hinted at the possibility of lowering tariffs on China. Technical buying also contributed to the rally. In contrast, corn futures slipped as forecasts of dry weather across the Corn Belt are expected to speed up planting. Wheat futures were also lower, pressured by a slowdown in global wheat tenders and rainfall expected across the U.S. plains.
Let's go back to basics and look at some charts this morning. Here's the July soybean chart, and it looks pretty good. We've had a sharp rally, and then we've seen some consolidation, but we're knocking on the door of some fresh multi-week highs this morning. If we could push this July bean contract up above 1059 and make it stick on a closing basis, I think that would look really good. You'd probably have a chance to go test that downtrend line. That's going to come in somewhere in the 1090 neighborhood, ballpark-ish. Corn has not acted as well. We've seen some selling pressure during the last few sessions, and I suppose this is just kind of lack of a bullish catalyst. Maybe it's because planting pace here in the United States has been ahead of schedule, and we don't really see any hiccups. You know what? If we continue the next few weeks with a mostly normal planting pace, you could go down and easily test that longer-term uptrend line that sits in the mid 450s. I think that's possible. Wheat and HRW wheat futures in particular looks absolutely terrible. Fresh life of contract lows posted overnight in the July 25 HRW contract. And a lot of that, I believe, has to do with weather. Our main HRW wheat growing areas in this country are in Kansas, like the western 2/3, a little bit in Oklahoma, eastern Colorado, southwest Nebraska, a little bit of North Texas. They've caught some rains here over the last 7 days, and there's more rain on the way. The next 5 days, if you guys are watching, is on the left, and then the totals expected over the next 10 days is on the right. And there's more rain coming. So I think that the market is optimistic about crop prospects when it comes to HRW wheat in particular. And that's why that's been the weak leg of the wheat complex. So you should probably see an improvement in ratings here over the next couple of weeks if these rains come to fruition. So actually, when you go back and you look at the three charts, like the markets are kind of acting independently. You've got some strength in soybeans, you got some weakness in corn, and you've got some, we'll call it super weakness in wheat, which has been the worst actor in our grain complex here as of late.
Drought and excessive rainfall across China's key growing regions are impacting crops. These unfavorable conditions come at a time when the country is dealing with a decline in crop imports amid the ongoing global trade war. In the North China Plain, below average rainfall is significantly affecting corn and wheat production, with dry conditions expected to intensify. Similar drought related stress is impacting crops in the country's southeast region. At the same time, heavy rainfall in China's northeastern region is delaying the planting of corn and soybean crops.
Your first sentence there was interesting. Drought and excessive rainfall are
Yes.
impacting China. And that is exactly what's going on. Let's talk about China first. China's the world's second largest corn producer. They're a big deal. We don't talk about production in China a whole lot, but they matter. They haven't been importing a lot of corn the last couple of years. Their imports have been on the decline. Let's look at some maps. This map on the left is from our friends at Marcus Weather, and this is rainfall as a percentage of normal over the last 14 days. And if you look on that map on the left in the upper right, that's super dark green. Some of your biggest corn producing areas in China have seen like 5 times their normal rainfall over the last 2 weeks. And this is a time of year where they would typically be planting in those regions, which is like the main corn belt in China. Late April into mid-May is when they would generally plant corn. And if this stuff is correct, and any sort of data out of China, whether it's weather, planting pace, any of that stuff, we don't know. We don't have a clue. They don't give us anything. We have some maps. Maybe this data is close to being realistic, but they've potentially got a problem. Does that mean that they have to start importing a bunch of corn? No. They're sitting on massive stockpiles. They're sitting on, I forget what the stat is, 60 or 70% of all global corn ending stocks. But this is probably something that we should pay attention to.
The Trump administration is considering lowering tariffs on Chinese imports in an effort to ease trade tensions. According to a senior White House official, the proposed changes could reduce tariffs to a range of approximately 50% to 65%. The administration is also considering a tiered approach. Under this structure, goods viewed as non threatening to national security would face a 35% tariff. Products considered strategically important to national interests could face tariffs of 100% or higher. Earlier this month, following multiple rounds of retaliatory trade measures, President Trump imposed a 145% tariff on Chinese imports as part of his broader reciprocal tariff policy. In response, China currently maintains a 125% tariff on U.S. goods.
Maybe the White House is starting to be concerned about what's going on in some of the markets. Maybe they're not. Maybe this is just talk. The sound bites, the daily sound bites and little headlines are exhausting. I'm sick of dealing with this, but this is how it may be for the foreseeable future. Scott Bessent said yesterday that the tariffs and the current environment, it's all unsustainable, is what he said. China was out overnight. They said that the U.S. should revoke all unilateral tariffs, and I think the headline here is kind of misleading. It says denies talks. They're just saying that we haven't talked yet. And they're both saying like, hey, we need to talk. I mean, is it that hard to pick up the phone? I don't know. I think Trump just wants them to call, something
Yeah.
along those lines. Anyways, I don't know if there's anything new here this morning that's groundbreaking. The stock market and some of the stuff rallied yesterday on the Besson comments, and some of the stuff out of the White House. We're back lower this morning.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of our recent premium videos?
Mackenzie did charts with Brian yesterday, and in this sort of headline-driven environment, it's very difficult to cut through the noise. And I think that charts and technical analysis do exactly that. And as far as grain charts go, Brian's the best in the business, and you should watch what he has to say about corn, soybeans, wheat, equities in this instance. Really fantastic stuff. Brian does charts with us every 2 weeks. Jim Urio was on Tuesday. The biggest thing nobody talks about. What do we talk about mostly? Crop production, demand, weather, that sort of stuff. Those are mostly the things that drive grain prices. But this year, Jim has an interesting theory regarding interest rates and the Fed, and some things that could be of significant impact to our commodity markets. New crop corn target orders we did on Monday. I discussed kind of my general game plan when it comes to new crop corn, also new crop soybeans. And I laid out the targets. I laid out what I've done. All of my cash grain marketing recommendations are broken down by crop year, and percentage. Super easy to follow. If you guys want to see the premium stuff, you should really jump on the email list. Subscribe today. This is a $50 per month subscription. Information only. We don't want to sell you anything else. We don't want to do your brokerage. We don't want to sell you crop insurance. We don't want to sell you anything except for our information. The standard grain morning update goes out at 5 a.m. Central Time every single business day. I get up at 3:45 and I put the thing together. You should check it out. It's jam-packed full of info every single business day. Give that deal a shot today, guys.
U.S. ethanol stocks declined sharply last week. The stocks number of 25.5 million barrels was down 5% on the week and down 1% versus the same week last year. The current stocks level is the lowest since mid-January. Weekly ethanol output of 1.03 million barrels per day was up 2.1% week over week and up 8.3% compared to the same week last year. According to Reuters data, U.S. ethanol production margins are near break-even levels.
All right, so we got our drawdown in stocks, which is what we needed to see, but is also totally normal. We're still a little bit higher than we'd probably like to be, but as long as it continues to draw down at a normal seasonal pace, I think we'll be just fine. Ethanol production is strong. I think we're on track mainly to hit USDA's target. You may have some wiggle room in either direction, but good stuff, bright spot for demand.
Dry weather is forecast in Argentina over the next week, and according to the Buenos Aires Grains Exchange, these dry conditions will accelerate the country's delayed soybean harvest. Excessive rainfall in March and early April had slowed progress and raised concerns about potential yield losses, pushing the harvest pace below the 5-year average. As a result, soybean sales have dropped to a 10-year low, with only about 23% of the crop sold as of last Wednesday. The exchange estimates Argentina's soybean production at 48.6 million metric tons.
Yeah, they're pretty close to USDA's estimate, which is 49, I believe. And what happened in Argentina, they started off dry, then they caught a bunch of rain, and now maybe it turns dry again in some areas. Far northern areas are going to see quite a bit of rainfall. Same thing with far southern areas, but actually your highest density soybean production areas would be in that little dry spot in the middle. If you guys are watching, this is a very good map from our friends at Crop Profit. Maybe of more importance to us this time of year would be Brazil's second corn crop. And the weather has been very good to this point, and the weather forecast looks very good. Brazil second corn areas are supposed to see 190% of their normal rainfall over the next 14 days, according again to our friends at Crop Profit. So they're in good shape. That crop is going to be sizable.
Oil prices tumbled on Wednesday following reports that OPEC Plus is considering an additional production increase. Several member countries are pushing for a boost in output that would match the additional volume set for May. Earlier this month, OPEC Plus unexpectedly announced a production increase next month of 411,000 barrels per day, about 3 times the originally planned amount. WTI crude declined by 2.2% yesterday, falling to 62.27 per barrel. 8 OPEC Plus members will meet on May 5th to finalize their production plans for June.
Crude oil futures posted some lows down at $55 a couple days ago, and we bounced back. A lot of this has to do with the actually this is a weekly chart a couple weeks ago now. A lot of this had to do with the tariff headlines and, just general thoughts of global recession, that sort of thing. But you look at, to go back to the headline, OPEC wants to increase production, but prices are down. That doesn't make any sense, right? There's a lot of infighting in OPEC right now. Saudi Arabia has taken on a lot of the production cuts, and they're getting very frustrated with Kazakhstan and Iraq and the UAE because they've been exceeding their quotas. So they want to increase production to kind of get everybody back in line, I guess, is the general idea. It still doesn't make a ton of sense to me. OPEC Plus has cut output by nearly 6 million barrels per day over the last 3 years in an effort to support prices, but their production cuts have lost a lot of their impact because demand growth has been sluggish, and you've seen increased output from a lot of non-OPEC countries. So maybe OPEC doesn't quite have the absolute power that it used to. It's still got power, make no mistake about that. What did cattle do yesterday?
They were higher once again. Live cattle were 30 cents to $1.82 higher. Feeders saw gains ranging from 90 cents up to $1.42. Box beef prices were mixed. Choice was up a mere 24 cents at $331.97, and Select was down 313 at $314.52.
Outside markets kind of mixed this morning. The stock market's off, but not by a ton relative to what we've seen the last few weeks. The Dow's down 180, the S&P's down 15. Treasuries are up just a little bit. The U.S. dollar is down, we'll call it sharply, after a rally yesterday. Crude oil is up 52 cents in the June WTI at 62.78. Have a great day, guys. We'll be back on Friday.